Have you ever thought about being a landlord, being a real estate mogul, owning all the blocks and all the bricks in your neighborhood? Well, for some people, that's easy. For some people, it's really hard. But watch today's show, and you'll be able to figure out how to do it with a little bit of money by investing in what's called REITs, or what's called REITs. Welcome to this edition of the Money Church, or the Financial Church of the Black Wealth Rebels. What's up, brothers?
What's up, how are you, man?
Good, man. Good. Now, I don't know. Did the stream go out right? Let's see. I had problems with it earlier last night.
That's what she said.
I hope that's not what she said.
I mean, listen, man. Everybody had problems.
Listen, man.
It looks like it went out. All right, cool. All right, well, I'm not going to be here that long today, y'all. I'm actually mad because I wanted to sit on this because I love REITs. One of my favorite things, one of my favorite investment vehicles, because I love the income stream that it creates. Great for people who want to generate income. Great for people who are looking to build a retirement portfolio. And I think a lot of people don't understand the nature of REITs. What do y'all think about that?
No, I think it's good. There's a couple things I want to ask you before you got out of here, because I know you gotta
skedaddle.
You gotta have stuff to handle. But the one thing I want to, because it's relevant to what we're getting ready to talk about. The one thing I wanted you to explain from your world, as the chief tax problem fixer, as it says in there, is the difference between a dividend and a distribution. Because that's a relevant conversation as it pertains to REITs. If you, I don't know if you have enough time though, but could you briefly, if possible?
Well, sometimes a dividend is a distribution. A lot of times, depending on what it is. However, most times when they're talking about a distribution, it came from what's called a capital gain when something was sold. The business of REITs, and there's different asset classes within REITs, but they buy property, they rent them out, they then give the majority of the income they produce back to the shareholders. And I hope I'm not stepping on your thunder, Jimmy.
No. I mean, we're going to get into the specifics of it, but I know that like with REITs, 90% law.
Yeah, I was going somewhere. But, a large part of the income goes back to the investors. That's why they have favorable taxable status. However, when you sell an asset, it's not considered income in the same way. It's considered a capital sale, for lack of a better term. So if the REIT buys a building, then sells a building, and they do a distribution based on those funds, a lot of times that's considered a distribution. So it just really depends on what's going on with the overall REIT.
Yes. So we're going to get into REITs. But if you got to bounce, good brother, go handle your business. I don't know how long you want to stay around because I'm getting ready to get this chopping. For those that are in the village, right? Because this is streaming in the village too. And shout out to everybody in the village watching back there in the village. Matter of fact, let me look at my little, you know what I'm saying? See how we popping in the village. Yeah, we in the village. So anyway, for those that are in the village, you click on, blah, blah, blah. I will chop the portion of today's class that we talk about REITs, the PowerPoint presentation, and put that into its own little section for, members of the village. So we're going to talk about that. We're going to talk about what we're looking at this upcoming week in the market, and we'll be out of here. Like, we're not going to have a long show this morning, but I think it's important to talk about REITs. It's a great asset class. So if you guys are ready, man, I'm ready to get busy.
Chop this fable.
Yes, let's get ready to chop this fable, as the beloved Little Luck says. I'm saying blackwealthrebels.com. Cut it off my PowerPoint, but it's all good though, because you already know. Matter of fact, let's show it at the bottom too, real fast. Yeah, for those who don't know, for those who aren't in the village, this is how you get into our village. And our village is literally just something that we're curating to share a lot of our content. And that content is about everything. It could be from real estate investment trust to the stock market, to real estate, to why Nate is an American hero. All those things will be found in the village, which is blackwealthrebels.com. You know what I'm saying? Like, so these are all the things we will talk about. But let's get into today's class. So we're going to start with what is a REIT, right? A lot of times, as Kamari said, people want to become real estate investors, but they do not want to deal with all the problems that come with being a real estate investor, right? We call those the 4 T's, right? Taxes, toilets, tenants, and termites, right? So a lot of people don't want to deal with a lot of those issues that come with being a landlord. So real estate is glorified a lot on social media. I understand why, because it's one of the most powerful and biggest asset classes that there is. But a lot of times people only show you their highlight reels. They do not show you what it really takes to be a landlord. There is no way to be a passive real estate investor, with the exception, in my opinion, this is just my opinion, of a REIT, right? And by the way, anything I say here this morning is not investment advice. It's for educational and informational purposes only. But I honestly believe that there's no passive way. I don't care if you have a property manager, because even if you hire a property manager, you then have to manage said property manager. A REIT, in my opinion, is the only passive way. So real estate, and I've said this on several occasions, in my opinion, is probably not the greatest investment when you look at rate of return, right? But I believe that real estate is the greatest business, and everybody should be in the real estate business in one way or another. Again, just my opinion. But if you're not into being a landlord, a flipper, or a developer, all the different things that you can do in real estate, a REIT might be a great idea for you. So let's start with, what is a REIT? It's a real estate investment trust. It's a company that owns, operates, or finances income-generating real estate. That is directly from Investopedia, as you can see at the bottom of the screen. But it's a company that owns, operates, or finances income-generating real estate. Now, the great thing about a REIT is it's not just income-generating real estate, if you really want to break it down, because certain REITs are companies in the real estate business that handle mortgages. But one of the great things about a REIT is you can get all kinds of exposure to different types of property by going through a REIT, whether that is residential property, such as INVH. And again, I'm just throwing out tickers that I know off the top of my head, not investment advice. They handle residential property, Prologis, a lot of property that's industrial or commercial, casinos. One of the things that our investment club owns is DLR, digital real estate investment trust, which is they handle cloud computing servers and things of that nature, right? And people that operate the digital space that rent land and property, right? So Digital Realty Trust is the name of that ticker. But there's so many things: hospitals, literal schools. Sounds a little nefarious, but prisons, right? And by the way, for those who would say that's what Michael Jordan did, no, he didn't. Do your Googles, right? That's not even a true story, but I digress. The idea is you can get into all different types of sectors by buying a REIT, all different types of real estate that you may not be able to get if you were just trying to buy the real estate in a tangible way, right? The average person doesn't have the ability to go out and buy a casino, but you can get equity in a company that owns a casino by using a REIT. Now, those that are proponents against REITs, what they'll tell you is you can get better returns by buying the real estate yourself in managing and operating said real estate. That's possibly true, but Corey often talks about the whole idea of lifestyle design. And shout out to our brother Pass. Pass always talks about he doesn't want to own any tangible real estate because he doesn't want to be responsible for what comes with that. And also, this is just a different way to design your lifestyle, right? So let's talk about the history of REITs. Why are REITs what they are, how they come to be? On September 14th, 1960, President Dwight D. Eisenhower signed legislation that created a new approach to income-producing real estate investment, which is that REIT, right? It's a manner in which the best attributes of real estate and the stock-based investment are combined. So another way to look at a REIT is a combination of the stock market and real estate. If they created a baby, it would be a REIT. So for those that love the stock market, but want to have exposure to real estate, this is a great thing. For those that, believe that the stock market is better because of liquidity, but you want to be in the real estate business, it's also a great way for you to do it. And also, this is also a point of showing the power of legislation in politics and how it plays a part when you talk about the financial sector, right? Because this is something that was signed in the legislation. Now, Corey, let me ask you this question, bro.
Yo.
What do you think happened to make him sign this piece of legislation that created a REIT, right? So what do you think?
1960?
Not even from a historical standpoint. What do you think happened to say, okay, I need to look at this? Like, how did it come across the president's plate to say, let's look at creating this new vehicle?
He probably got hit by some kind of tax or something You know what I mean? Like some kind of personal life changing event.
It could be, but what I was leading towards is lobbying, right? So those that want to understand why politics is important as it pertains to finance or economics, it's because if you have the right capital and you get in front of the right people, you can get legislation changed. There are probably people who had real estate and owned a bunch of real estate who were looking to get more access to capital, and this is an easy way to get access to capital, because when you think about what a REIT actually is, it's the pooling of capital to get involved in the real estate space. So instead of you just the traditional way going to your bank and getting a loan or something of that nature, you can pool capital with other investors to create a REIT. So REITs for the first time brought the benefits of commercial real estate investments to regular Americans. Back then, an average American didn't have the ability to say, go buy a commercial space. And this is 1960. So that had only been available through large financial intermediaries into wealthy individuals. So the way it was sold was kind of democratizing access to owning commercial real estate. The groundwork for the modern REIT era followed with the Tax Reform Act of 1986. See, again, more politics. When REITs were given the ability to operate and manage real estate rather than simply owning or financing it, right? So now REITs have the ability to manage real estate rather than simply owning or financing it, which is why you see a number of mortgage REITs, right? You can buy into a REIT that just is handling mortgages. So, and this, by the way, comes from the National Association of Real Estate Investment Trusts, which is an organization. That's where I got a little bit of the history from for this presentation. So that's a little bit about the history of REITs, how they came to be. The idea at the time, at least how it was sold to the public, is this is a way for the average investor to get access to be able to invest in large-scale commercial projects, right? So why do people invest in real estate in general? So the idea of real estate in general, and majority of this definition or this explanation is really dealing with tangible real estate, physical real estate, but people like the idea of leverage. And what I'm going to do is I'll break down why real estate is to explain why this also makes sense as it pertains to REITs. But in traditional real estate, and what I mean by traditional real estate that I keep saying tangible or traditional real estate, I'm talking about our real estate investors that go out and buy a single, a multi, or even apartment building. But real estate investors like the idea of leverage, because I can buy an asset, say, for $200,000 with only $20,000 out of my pocket. When in the stock market, I could also use leverage, but margin is a little bit more dangerous than using leverage as it pertains to a bank, because you have that asset to back up what it is that you are borrowing for, right? So leverage, real estate investors love leverage. Why does this apply to REITs? I'm going to explain to you why. Because REITs to me are the ultimate leverage, because we think of leverage only in terms of capital. But what about human capital? What about time, right? Me and Corey always are talking about the idea of the value of time. When you buy a real estate investment trust, specifically if you're buying one of the more blue chip real estate investment trusts, you are getting the greatest property managers, right? That have the best training from the best schools. You're getting the best accounting. You are getting the best leverage in terms of having a bunch of assets being able to leverage to get work done in terms of your mechanicals, plumbing, all those different types of things. You're getting leverage in that manner. The thing about the stock market that people don't talk about as it pertains to leverage is not just leveraging your money, but let's just use Apple for an example. If I'm an investor in Apple, I am leveraging human capital. Everything that Apple does in terms of creating products and things for sale, right? I'm getting a piece of that. I am leveraging Tim Cook. Tim Cook technically works for me, right? So I'm leveraging human capital. With real estate investment trusts, you are doing all of the same, but you also get better leverage when it comes to the financials as well. And I'm speaking specifically about blue chip REITs, because not all REITs are equal. But they get the best deals in terms of banking as well. So that is why leverage not only plays a part in regular real estate, but real estate investment trusts, right? Generate passive income. People tell you that they can generate passive income in real estate. I'm here to tell you, with 20 plus years of experience in the space, there is no such thing as passive income with tangible real estate, because even with property managers, as I previously mentioned, you have to manage them and make sure that they're doing everything that they must do. Now, you have one point of contact as opposed to dealing with, say, a multitude of tenants. But the idea of it being completely passive is a joke that you see on social media for people who are just trying to get you to follow or sell you something. The other part about it is land will always have value. That could be a class in itself, but the idea, and I've mentioned this in several different classes, and if you're in the village, which is blackwealthrebels.com, you see me talk about the acronym DUST, D-U-S-T, which is what gives real estate value and land value, which is why land itself will always have value. There's an objective value in land too. Because it exists, it has value. So Land will always have value. And again, going back to the last two, passive income and land will always have value. With a REIT, it is actually passive. It's liquid and it's passive, right? So I can buy a REIT, I can get the income that comes from that REIT, and I don't have to deal with the property manager or any sort of tenants or any sort of contractors or anything that gives you a headache when dealing with tangible real estate. Now, the other part about land will always have value. You own the company that owns the real estate. So the fact that land will always have value, you get the benefit from that as well. Generally speaking, real estate tends to appreciate over time. Now, we can dig deep into why that is. I will tell you it's because our dollar is being deflated, but I don't want to go off on a tangent with that. But generally speaking, real estate tends to appreciate over time. So if you own a REIT and you own a company that owns that real estate, you still benefit from real estate having the ability to appreciate over time. Now, the last one is specific to tangible real estate. People like to buy real estate because they feel like it gives them control. It's something they can see, touch, or feel. That is missing from a REIT. However, the one piece of control that you have over a REIT, which you don't have over tangible real estate, is liquidity, right? If I own a REIT and I want to get cash out of that REIT, I don't have to put it on the market or find a buyer or well, you do find a buyer, but there's a liquid market, for you to sell said REIT. And if I want to just get money or borrow from that REIT, it's a lot easier. The thing about tangible real estate, which is interesting, is you can have a bunch of equity and you still have to go to someone else to tap into the equity, right? Imagine owning $10 million in real estate and whatever happens, you make some sort of mistake with your credit and now you can't get to that $10 million in real estate, right? That's problematic. And we can, in the future, talk about ways to kind of avoid that and make your tangible real estate more liquid. I know of a couple ways. But at the end of the day, again, generally speaking, a REIT is better when it comes to liquidity in terms of being able to access capital and get capital quick when you need it. And to me, there is a value in liquidity. There's a value in liquidity. And I understand that some real estate investors prefer it not to be as liquid because they feel like when it's too liquid, human nature makes you jump in and out of investments when with real estate is more difficult to do. And I understand that. But if I need my money, I need my money to simplify it, right? So why a REIT? REITs can be a great investment for several reasons, but it's essential to consider your investment goals, your risk tolerance, and everything before you make that decision. I'm going to give you 10 reasons. Here are the first 3, then I'll give you 4 more, then 3 more, right? So the first 3 are diversification. REITs give you diversification because you're investing in something that is not tied to a lot of the other investments that a majority of us make, which these days will be the tech sector, right? But you can diversify within REITs, as mentioned before. You can get commercial properties, residential properties, healthcare facilities. There are all kinds of REITs out there. Any piece of property, like just go out your house today and you ride around and look at the different types of properties that are out there, you can find those in a REIT, whether it's an amusement park. Some of my favorite REITs that I like, and again, not investment advice, it's just like REITs that I follow. I like IMVH, who's one of the biggest landlords in the world, right? They do residential property. There is what's the apartment one? They do a lot of student housing in apartment buildings. There's so many of them in so many spaces. Digital Realty Trust, I like them as well. There are hospitals. The favorite of a lot of investors is O, right? If you look up ticker symbol O, because they pay monthly. So people try to figure out a way to get monthly income the same day they would with tangible real estate by buying something like O. But there are a number of them, right? Here's the other part. High dividend yields. Now, I also want you to be careful when it comes to high dividend yields, and we'll talk about that in a second, but REITs are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends. This can result in attractive and relatively stable dividend yields, making them appealing to income-oriented investors. So, right, this is a good thing, but it also can be a bad thing because what I tend to find is people always approach me with these different these REITs and even stocks they find, and they say, man, look at this dividend. This is paying an 18% dividend. And I'm like, well, let's look at the books of the company. And when you look at the books of that company, they probably shouldn't be paying you a 15, 18% dividend because they're mired in debt and they're not producing enough income to do that. So, it's a house of cards. So you have to be careful when looking at these numbers. Don't just get attracted to the dividend yield and forget all of the other fundamentals that we talk about week in and week out when you're evaluating a company. Because remember, a REIT is a company that owns real estate. So a lot of the fundamental analysis that we talk about you still want to perform that fundamental analysis. Now, although they operate, in my opinion, the best business in the world, you still want to make sure that they are paying their debt. They're not accumulating too much debt, that they have reserves, right? So you want to make sure all of the things that we talk about are still existing in REITs, and do not just buy a REIT based on dividend alone. I already mentioned liquidity. They're publicly traded on the stock exchange that provides liquidity that direct real estate investments often lack. You can buy and sell REIT shares like stock, allowing you to access your investment capital more easily. It's also an easier barrier to entry, right? A lot of the different brokerages allow you to buy partial shares or, just fractions of shares and all the different types of things, or even just buying one share these days. So you can, after watching this video, of course, go to your brokerage and, put in the order for Monday morning to get access to a REIT, right? And you don't have to go through all the things you have to do in terms of buying a property and recording of a deed and all the various things that come with, as they call, direct real estate, and I'm calling tangible real estate. So, and by the way, you can do fractions of shares. You don't just need Robinhood or M1. You can do it also on Charles Schwab and Fidelity and many of the other bigger brokerages, for those who don't know that. So those are the first three. Let me give you four more. Professional management. I've already mentioned that. REITs are managed by experienced professionals who handle property acquisition, management, and development. Investors benefit from the expertise these management teams have as they make their decisions on behalf of shareholders. Again, when I buy a REIT, and specifically a blue chip REIT, I'm getting access to the best managers out there, guys that have trained in real estate and who operate at the highest levels. I am leveraging their professional expertise and their time. Also, the level of transparency. Now, I want to mention this as I talk about transparency. There are also private REITs as well, people that raise capital who have REITs in a private way. What we're talking about here are publicly traded REITs that you can find on the stock market, and those offer a level of transparency because they're subject to regulatory requirements, right? This includes financial reporting and disclosures, so that provides transparency and accountability to all investors. So you can go right online on their website, pull up access all their financial documents, which transparency is very important as it pertains to investing. You want to know where your money is, how it's being operated. I can listen in on earnings calls. All the things you can do with the stock, you can do with the REIT as well. You also get access to real estate markets. Investing in physical real estate properties can require significant capital, but REITs allow you to invest in real estate markets with a much smaller initial investment, and that means that you can get access to owning a piece of a commercial building, right from your cell phone, right? So again, it's very, very low barrier to entry as it pertains to this versus direct or tangible real estate. So it also has the potential for capital appreciation. A lot of times people look at REITs specifically for the income that it could generate, but those companies also rise in value as well. So you can actually get capital appreciation in REITs, right? So they can appreciate over time and give you a capital gains in that way, while at the same time paying that dividend that attracts so many people to REITs. So that was the first three. Here's four more. That's seven. So let me give you three more. Inflation hedge, right? We talk about inflation hedge. We talk about using investments to combat inflation, but real estate is often considered a good hedge against inflation. So a lot of times when the tech sector is booming, your REITs may not be booming as fast, but what you are doing is diversifying and having an inflation hedge, right? So they provide exposure to an asset class that over time has generally had beat inflation, which is real estate, right? There's also tax advantages. REIT dividends are typically taxed at a favorable rate, and some REIT income may be classified as a return of capital, which can defer taxes. Again, I'm not a tax professional. Our tax professional had to leave, Kamari, but he can explain to you why. The other great thing about it is when you use one of the accounts, such as an IRA, a Roth IRA, or my favorite, a Roth 401k, you can build up all kinds of income from REITs and, be really tax advantageous by using those specific instruments. So if you want to get deep into the rabbit hole, that's something that you can do. The last but not least, and I think this is the most important thing as it pertains to REITs, which is really it being a passive investment. Investing in REITs allows you to participate in real estate markets without the hands-on management responsibilities that come with direct property ownership. I have been a landlord for multiple decades at this point, and I can tell you that I've gotten phone calls for some ridiculous things. Hey, I need this fixed, or this is wrong, or that is wrong. And again, you want to provide quality housing. You don't want to be a slumlord, so you want to take care of things. But the idea of being able to build up a portfolio in REITs that can pay you the same way that a building could and not having to worry about it at all. Also, geographic freedom, right? I've invested in multiple states in my lifetime. And for me, at least personally, as a real estate investor, that was one of the worst things I did because I wasn't able to get to my properties in time. I had terrible management. Again, I could have just leveraged that money with REITs and done a lot well. Just being able to be anywhere and have those businesses operate, to me, is a cheat code. People do not talk about leverage as it pertains to human capital enough, because that leverage with human capital is kind of everything, right? For those that are in real estate and have dealt with contractors or dealt with tenants, right? Let me know in the chat for those watching live. tell me how do you enjoy dealing with people, for lack of a better term, that that all surround dealing with tangible real estate. So here are some of the largest REITs. This data is a little bit old, so those total assets are probably a little bit higher because I started working on this a little while ago, put this together, for the village. But Prologis being number one, if you look at the total assets, it's in the billions, right? And Prologis, when you dig into their books, they rent a lot of warehouse space to Amazon. So these are huge corporations. American Tower is huge. Crown Castle International, right? These are all huge corporations. And these are the kind of assets that they have under management. And by you buying equity in one of these companies, you are an owner of the company that has all these real estate assets under management. So these are some of the largest REITs. You can do your own due diligence on things such as Prologis. We trade Prologis from time to time as well, depending upon sector rotation. So there are a lot of great investments in REITs. Now, there are also a lot of trash investments in REITs. I'm not going to lie to you, right? This is why you have to understand fundamental analysis as it pertains to REITs and do your due diligence. Fundamental analysis, to me, is the strongest when looking at REITs. So a little bit of Prologis' balance sheet, but you can see they are making money hand over fist. This is their earnings going all the way back to the last quarter of 2024. I'm not going to dig too deep into this. Maybe we'll do a company breakdown in the village of Prologis just to talk about the different properties that they own and the income that comes in. But just a quick look, you can see that they make revenue in their earnings per share.
I think we should do that just to show people where to go to get the information, because a lot of people just don't know where to go to get
absolutely
that information. So
a free source would be Yahoo Finance, right? Go to Prologis, click on the financials, you can see it. What I'm showing now actually comes from TradingView. And
I'm talking about where to find what companies that they do business with.
Okay. Yeah, we could definitely do that too. All right, yeah, we'll do that behind the wall because that'll take a little bit of time. We don't want to do all that. This morning is really
Yeah. I'm not talking about doing that right now.
Okay, got you. No problem. All right, so just a little bit more about the dividends and how their dividend, has been increasing in terms of Prologis. But it's just this is they have a strong balance sheet. They own a lot of great assets, and it's a strong company overall. I'm not endorsing you to buy Prologis, but to go do research about it, right? Here's another one. I know my brother Don will love this, right? One of the greatest real estate investment trusts there is VNQ, right? VNQ is a Vanguard real estate ETF. It's an ETF that buys REITs. So it's an exchange traded fund that gives you access to a bunch of different REITs. So if you say, look, I don't feel like doing all the research of finding those top REITs, you can just buy an ETF, right? So VNQ is a good one. VNQ plays a nice dividend itself. I think it's about 4%, somewhere around there. But these are the companies that are owned within VNQ, which are, Public Storage. Everyone sees Public Storage. Equinox. We got Crown Castle in there as well. Well Tower, Simon Property Group, another dominant one. The aforementioned Realty Income Corp. All right. Also the Digital Realty Trust. We mentioned those. Those are all held within the ETF known as VNQ. Now I'll tell you, I'll again, not investment advice, but I'll tell you my favorite REIT ETF isn't VNQ, is actually XLRE. And XLRE, what they do is they have less holdings than VNQ, but they specialize in the REITs that are a part of the S&P 500. Because to let you know that there are REITs within the S&P 500. So for me, my biggest REIT holding is actually an ETF. This is my personal portfolio. I have thousands of shares of XLRE that I've been building up over a long period of time. All right, so let's just bring it all together, right? REITs offer several advantages. It's important to be aware of the potential risk as well, such as interest rate sensitivity, right? Interest rates will affect REITs the same way they will the actual real estate market. Market fluctuations overall, and specific risks related to the type of real estate in which the REIT invests. Additionally, not all REITs are the same, so it's crucial to conduct thorough research and consider your investment objectives before adding them to your portfolio. As with any investment, it's advisable to consult with a financial advisor because we are not financial advisors here. But what I want to say is this. do not, and this is the biggest piece of advice I can give anyone, do not buy a REIT on dividend alone. Please don't do that, because there are a lot of trash REIT companies, the same way, in my opinion, I don't know how Corey feels. I think a majority of companies on the actual market are trash.
Actual trash.
But with that being said, there are a lot of great companies as well that have great balance sheets that are good at managing capital. Because at the end of the day, I don't care whether you are selling cell phones, whether you're renting real estate, whether you're selling widgets. It's about what are you doing with that capital? How are you taking that capital and creating value? And what are you doing for your shareholders? So you want to look at a REIT the same way you would any specific company. But I think it's a great alternative for those that want to be in a real estate space, but don't want to deal with everything that comes with being a tangible property owner. I'm someone that's a tangible property owner, but I have been shifting a lot more money into REITs over the last decade or so. And to be honest with you, I've enjoyed it, right? I still think real estate's the greatest business. I always will have a couple properties that I own. I will. Like, I'm never going to go 100% out of real estate. That's never going to happen. But REITs allow me to be picky when it comes to buying a property. So instead of just forcing myself to buy a property for the sake of buying a property, that property has to meet a certain threshold of criteria that I use in terms of my analysis of buying tangible real estate. If it doesn't meet that, I'll take the capital and put it into a REIT until I find one that does meet that, right? So, all the different rules that I give you guys within the village, and those that are in the village, you see I'm creating a series of real estate math and different ratios and different types of ways to look at real estate. But if those things don't meet the criteria that I'm setting forth, then I'll just go buy a REIT, right? I'll go buy more XLRE and get paid, a 4% dividend, holding some strong companies while I wait for something that can actually do that. If my cash on cash return isn't right, if it doesn't meet the 1% rule, right? If my cost to rent ratio isn't right, all the things that I look at, and I'll continuously add to that list as well for those in the village, you'll see, then I might as well just go buy a REIT, right? I'm not going to force myself into real estate ownership for the sake of forcing myself into real estate ownership. One of the things you learn about real estate in general is real estate, and again, this is from my experience, is very ego-driven. It's very, very ego-driven. So you hear people love to tell you how many doors they have or how many properties they have. But at the end of the day, what do their actual math look like? What do their numbers look like? Would they have been better off just buying a REIT instead of going through all the hassle of owning real estate? Can't answer for everybody, but for some people, I'm pretty sure that a REIT would have been a better alternative. So with that being said, I'm going to get to the comments section real fast. See if there's any questions in here before I end the REIT talk out. Let's get to it, though. Let's see who's here. All right, so Jamil is in the building. What's up, Jamil? Detroit's here. What up, though? You know what I'm saying? Jarrell's here. Good morning, Jarrell. Don's here. What's up, Don? Hey, Callie is in the building. Hey, Callie, a realtor, at my office as well. Shout out to everybody at, Realty One Group Purpose. Callie is in office with me. Don is laughing. Taxes, toilets, termites, and tenants. Yes, we want to avoid those things. Lorraine, what's up, Lorraine? How are you? Team Nick's in the building. Anthony's here.
Yeah.
Mark, what up, Mark? Mark Small's in the building. Hey, listen, Mark can tell you about those problems, man. Mark's a real estate legend here in Philadelphia. He can tell you about them problems. JT supports as always, man. What's up, JT? How are you? Check out BX. All right, yeah.
So BX is one of the companies that when we first started our camp, that's one of the first companies the kids, when we did our analysis of companies, that's one of the companies that they decided to buy.
Yeah, so BX, yeah, we've been talking about BX. BX is not a straight REIT though. BX is more of a private equity play, but they do own a lot of real estate. So didn't know they had land REITs. Listen, not only REITs for land, right? Let me give you a couple off the top of the head, right? They have REITs for farms too, right? Go look up LAND. Gladstone, I think it's Gladstone.
Gladstone, yep. That's Gladstone.
There's any type of real estate that exists, you can find a REIT for. You can literally buy into a farm if you wanted to, right? So what do you prefer, Schwab, Fidelity, or Robinhood? I think Marcus told me alley-oop here, right? So for me personally, I think that I'm a Charles Schwab guy, pause. But the thing is, I became Charles Schwab because they purchased TD Ameritrade. I was a TD Ameritrade customer, which got purchased by Schwab. But I like Schwab. The one thing I'll say about Schwab, which impressed me and why I moved a lot of my assets, like I used to be a very big into Vanguard, and I moved all my Vanguard assets to Schwab. Schwab, in my experience, has the #1 best customer service
by far
out of any brokerage I've ever dealt with. And I've dealt with Interactive Brokers. I've dealt with TD Ameritrade. I've dealt with E-Trade. I've dealt with Vanguard, M1, Robinhood, you name it. But to me, the big three, no shots at Kendrick or nothing. Well, I would say Schwab, Fidelity, and probably E-Trade. I think they're probably all in the same neck and neck, but Schwab's customer service is what makes me a fan of them. Robinhood, I have a love-hate relationship with Robinhood. Robinhood has allowed me to get more people into the stock market than ever before because of the ease of use. But their customer service can't match up to the big boys, Pauls. And also, there's some other problems that I find with Robinhood. Now, I haven't really went back and looked at it, but I would say about 6 months to a year ago, there was still some issues in terms of beneficiaries and things I didn't like with Robinhood. So me, I'm a Charles Schwab guy to answer that question though. James Sandman says solid information. Appreciate it. Listen, man, thank you for pulling up and thank you for the comment. We definitely appreciate that. Fact show. So Boom Bap says tenants be bugging. Listen, you already know tenants do be bugging. I'm about to make that a t-shirt. Tenants be bugging. You already know. And listen, Sandman got some other comments. Contractors are trash and they sneaky slick, right? So it's not just dealing with tenants. And again, I'll be completely honest. In my experience in real estate, tenants aren't the #1 problem. It's the contractors are like they lie and they don't tell the truth. All right, so James says you two are smart, solid. Hey, listen, man, I appreciate the comment, man. I appreciate the comments this morning, man, because we was here on Friday and my brother Corey was getting agitated with some folks that was clapping at us in the comments. So getting the positive feedback this morning is needed, man. So, and hey, listen, shout out to our brother, man. He's on his way to a meeting, but he's still checking in. You know what I'm saying? Hey, listen, man, drive safe, bro. Don't be out here trying to watch us on YouTube, man. Like,
right? Trying to drive and watch us on YouTube. Easy, Kamari.
Kamari's making an excellent point. He says they need to be able to service the debt. And this is absolutely true. I was looking at a REIT this morning preparing for this class. And I'm not going to put them out there. Go behind the village. We'll talk about it. And I was looking at them. They had a 15% dividend, right? 15% dividend. They have 5 times as much debt as they have earnings, right? So their debt is just way out of control. And I looked at the percentage of the they pay over 100% of the money they make out in dividends. I'm like, well, anyway, but you have to watch their books. That's, So TC says, I sold steady dividend, but its value was declining. Okay, so that's one way to look at it, right? If a REIT doesn't match whatever it is you're trying to do with your portfolio,
do the same thing you would do with a house. You sell it.
So I'm not mad at that. Now, some will say that as it was declining, you could have bought more. But again, I don't know your specific situation. I don't know where you bought in at versus where it declined to. But there's a number of ways to approach it when it's declining, right? Did anything fundamentally change about in their business model or the properties that they buy? But again, everybody's situation is different. If you felt like you can take that capital, and we always talk about capital allocation, and put it in a place that can make you more money, that was the right move for you. For some people, it may not have been, but it all depends upon your specific situation. But people love though because of the monthly dividend. So Boom Bap says, I've recently been shifting as well. Hold off on another rental due to cost, contractors, tenant quality. All right, so I'm not alone in this, right? For me, I'm not saying that I won't buy again, but it just has to meet my criteria. And my criteria is very strict and it's a little bit conservative. But because my thing is I have other alternatives. Once you understand how money moves and how money works and how there are multiple markets you can make money in, it makes you look at everything crazy. For me, I've been buying a lot of Bitcoin instead of real estate. I'm not going to lie to you because why deal with everything that comes with that if I can get a higher rate of return without dealing with it, right? Although real estate is my cash, not an investment, but I digress. In your opinion, is the cash flow dollar amount or percentage more important when analyzing a property?
Percentage.
Go ahead, Corey.
Percentages is always more important than dollar amount because if you look at dollar amount and let's just say you're making $1 million off of $2 million, right? And you bringing in 50%, that's bringing in 50%. But if you're making $1 million off of 1.9 million, I mean,
I got you.
You see what I'm saying? Like the percentages always mean more, than the actual dollar amount. Because if you have the right percentages, then you just have to scale out so that your percentages keep the same, keep the same percentages till you get to the dollar amount that you want.
Yeah, you kind of stole my thunder. I was going to say that I would always look at percentages, because the thing about it is we talk about capital allocation. If I can get 50% or 70%, then I want to get 70%, right?
And then you scale
Whether
up.
I'm talking about $10, I'm talking about 10 million. I want a higher percentage. All right. Anyway,
more percentages.
Because the thing about it is sometimes dollar amounts can be misleading, right?
Yep.
I can say I'm making X amount of dollars, but if that X amount of dollars only equates to 1%, then I can go over here and I can just go buy some T-bills and make 4%, right? Why do I want to get 1%? Even if the dollar amount is higher, I can make a higher dollar amount at 4% without taking the risk. And risk is something that we really have to talk about as it pertains to capital allocation and investing. I'm hoping my first rental purchase choice isn't going to blow up in my face. Family is renting and I'm already feeling the blues. Oh, man. Family got you feeling the blues.
All right, let's say this. Make them honor your contracts, and your real estate is a business.
Mm-hmm.
Those are the two things. Make them honor all the contracts and let them know that real estate is a business and it's your business.
Yes.
Because if you don't do that, that's going to be problematic for you, especially because now your emotions involved because it's family. So yeah, you gotta, you know what I mean?
Yeah, great point, Core. It's one of those things where you still have a business to maintain. Because the way I look at real estate, specifically tangible, physical real estate, I look at every piece of real estate as being a business and a bank. That's my mental model that I use. And I say that to say, I don't want to have a business that is going to cost me every month, because if I have a business that's costing me every month, it makes no sense to be in business, right? Unless I'm trying to grow or scale, right? Then I may be able to carry it for a certain period of time. But the thing about real estate is your real estate shouldn't be that way. Your real estate should be cash flowing. And sometimes when you're dealing with family, it gets a little bit difficult when you're talking about the emotional side of it. But to Corey's point, you have to set those clear boundaries and let them know that, hey, this is my business, right? So you got to respect my business. Vidon, I just mentioned him. He said Vanguard is trash, and this is coming from someone that has 90% of my portfolio with them. So I was a long-term Vanguard holder, and me and Vanguard and I got into some beef when the Bitcoin ETF came out, and I was trying to purchase it, and they wouldn't let me. And it wasn't even the fact that they wouldn't let me; it was how they talked to me when I called them.
Oh man,
they talked greasy to me. So I said, "All right, send. I wish I had a bleep button because I ain't trying to tell you how much money I had in there." But send it all over to Schwab. Then I'm getting out of here in general. I was like, now you can go kick rocks. But so FOH, they're the ops right now. Great question. Drop 16 TV. Practically speaking, is there a certain amount that makes it reasonable to start investing in REIT dividends or dividend stocks in general, rather than investing for appreciation? That is an excellent question, right? And I'm going to tell you why. I made a comment on here a couple of weeks ago, and people got mad at me when I said that dividends are overrated. What I meant by that is when you're looking to grow your capital, right? When you're looking to grow your capital, people tend to focus too much on getting the return of their equity in terms of dividends versus being in a growth company. The answer to that question, there is no clear-cut answer in my opinion, because I think it depends upon your situation. Because let me tell you this. If I'm a 20-year-old and I'm getting in the market and I'm looking to grow my capital, I want to focus on appreciation. If I'm 60 and I'm looking to stop slowing down working and I want to have my money create income for me, then I may be looking at something different. So it really depends upon your overall portfolio in terms of everything that you have working for you, and whether that's a business, your stock portfolio, also your age. There's a lot of factors in there. Do you make a lot of money and you're just looking to grow that capital, or are you looking to invest for, cash flow? So I don't think there's a right or wrong answer. But what I was saying when I made that statement was, if you're looking to grow capital and you're young and you want to just make sure that it's going up and up in value, then you may not want to be so heavy in the dividends. That's all I was saying, that you can make a lot more money in growth. And again, the data backs this up. It's just as in my opinion. If I look at a lot of the growth that's happened over the last decade or two in the market, versus what's been going on with a lot of the more mature dividend companies, it's not even close. So that's what I was mentioning about that. But that's a great question, Drop 16. But I think it really depends upon your specific situation to answer it. If you're heading towards retirement and just looking to get some income, then you're going to be a lot different than someone just getting in the market who's younger, looking to grow their capital. What's the benefit of REITs if you don't receive anywhere near the ROI on physical doors or depreciation and other tax deductions? And market sector ETFs offer better growth in dividends. Another great question from Jamil, right? So he's saying, why would I buy a REIT if I'm not getting all the things that I get with the physical real estate? I think we've kind of already answered that, because the thing about a REIT is building a REIT in the right way. You can kind of mirror what you're getting from your actual property, specifically if you're not buying that property in the right way. Here's what I mean by that. If I have a REIT that's paying me, say, a 5% dividend, and I look at my cash on cash return, I look at the return ROI of an actual property after all expenses, sometimes they'll be close. If I can make 5% on a REIT versus making 6% and having to deal with all that stuff, would I be willing to give up that percentage point to never have to talk to a tenant, a property manager, a contractor, right? Would I give up that 1%? I would 10 times out of 10, right? And the thing what I realized I talk to real estate investors literally every day. And one of the biggest takeaways that I can give you guys is a lot of investors do not know their numbers, right? They've been told that I should invest in real estate and real estate makes you rich and blah, blah, blah. So they go to invest in real estate. They don't know their numbers. Go ask the average investor, what is your annual rate of return? Most of them won't know that. Ask them what's their compound annual growth rate. Most of them won't be able to answer that question, right? They do not know their numbers. And if they actually took the time to know, how do I know that? Because I also was a real estate investor before that didn't know my numbers. Once I did my numbers, and then I realized, like, well, if I'm not buying these properties, if I'm not making the purchases in the right way up front, then I'm actually wasting my time, because I can make more money by allocating to a REIT or another type of investment, which is the second part of Jamil's question, which is an excellent part. So if other market and sector ETFs offer better growth or dividends, what is the point of buying a REIT? Now, that's something that you have to ask yourself personally as it pertains to your investment thesis, right? Because the thing about better growth and better dividends is cool, but what happens when the sectors rotate and everything changes? What happens when the market drops, right? There are a lot of times when your REIT will still have a strong performance, although the tech sector may be falling. So it's really about, like, diversification, if that's something that you believe in being, right? REITs may not be for you. REITs may not. So you may look at this and say, I don't want any REITs, and that's fine too. But I still think that everybody should understand what they are. What are the benefits? And a lot of times, we talked earlier in the presentation about the idea of that inflation hedge, right? That inflation hedge is important. When the sectors rotate and tech will, begin to fall a little bit, REITs may offer you that little safety net where you're still making money because people are still having to be somewhere in terms of.
I have INVH. I have INVH just by itself.
Mm-hmm.
But I think I'm going to I might either get VNQ or the one you had, the State Street one.
So XLRE, I'm gonna tell you, like, again, this is just my opinion, right? So XLRE is more concentrated in a smaller number. I think it's only like it's less than 50 companies in the whole thing. It's like 40-something companies in the entire thing. Versus VNQ has, I think, over 100 or so. But it's the cream of the crop, right? So when you look at and I'll show you guys in a second the holdings that are in XLRE. I'll show you so you can see what I'm talking about. Personal finance is personal. Yes, it is. Mayor, I'm taking my percentage the past 2 years via affiliate. Yeah, so that's the other part, right? So you have to look at your
local
actual
politics,
right? So he's talking about that's politics one, but then the second part about that is knowing your numbers again, right? Because people tend to give you their numbers in terms of, oh, I paid this for it, I get this in rent. Okay, what are your taxes? What are your insurance? You know what's been killing me lately? My insurance has went up close to 100%, I would say, over the last 5 years on properties. Now, that's going to cause me to push that back onto the tenants, but my insurance has been going crazy. My insurance on my rental properties, and it's every single one, has increased every year for like 5 years straight. So again, I'm knowing my numbers, and I actually created, it's funny, me and my wife were working on the other night, this is some real nerd stuff. We up at like midnight working on a Google sheet, because I want to get better at even knowing my numbers. And I'm someone who's data driven, but I want to automate a lot of things where I could just plug in something in the Google sheet and it gives me all, like that. So that's kind of what I'm working on, is automation of my numbers in terms of knowing my CAGR, knowing my ROI. So we were working on that the other night, and I'm looking like insurance is just going up and going up and going up. And that's eating at a lot of the profit that I once had in a lot of those properties. So, now I have to increase the rents. But I say that to say, If you know your numbers and you look at the numbers and you realize that you're not making as much as you once did, or now that I'm better off just putting it over here, sometimes you'd be willing to even give up a couple points, to be honest with you, because there's a headache that comes with that. You know, I sold a lot of my stock for a chance to purchase my first rental property. Was ready to get off the bench. Ooh, see, that's the other part too, right? And I understand that. Hey, listen, but the only thing that can happen from this is either a lesson, right? You can also learn from this experience, figure out whether it's for you. You might be great at it. You might say, look, real estate is my space. Or you may say, look, I'm never doing this again. I'm selling my property, FOH to real estate. I'm going back in it. So you never know how it works out. But the fact of the matter is you took that risk, and that should be, you know, that's applauded.
But you know what I mean? You got off the bench though.
That's right. Bitcoin doesn't require you to shovel. Yeah, I made a video about that, man. My Bitcoin never asked me to come shovel property. That's the other thing too, man. So I got my first vacancy this year in a couple years. Like I've been, my entire portfolio has been completely rented. You know, everything has been smooth sailing. And then I got a vacancy. Someone moved out because she had to get a bigger house. She had another kid, blah, blah, blah. So she moved out. And I'm sitting there like, in Philadelphia, it snowed a couple times over the past month or so. And I'm like, it hit me like, damn, I gotta go shovel again. Because I put shoveling in the up to the tenant in the lease, right? But then I was like, yo, I gotta go shovel again. This sucks ball. Like, yo, my other assets don't ask me to come shovel. Rich, what up, Rich? So Drop 16 says, in my opinion, I think I have to invest $10K for dividends. However, that's a good point. I could advise my parents to invest in dividends since they're retiring. Okay, so it all depends upon also what are your needs for dividend? Like in terms of the dividend, what is the dividend that you desire for it to make sense for you, right? Because the thing I like about dividends, right? And again, this is someone who says dividends are overrated, is watching them grow over time. Because although dividends are overrated, I don't do a lot of dividend stock, but I do have XLRE. I like watching it repurchase more XLRE and watching those dividends like quarterly. And getting listen, I remember the first time I got a dividend check that was over $1,000, right? Years ago. And I was like, I felt like I wasted the beginning of my life. Like, why didn't someone show me this when I was 2 years old? I know that sounds crazy, right? Yo, shout out to all the people that got kids and grandkids. Yo, set them portfolios up early, yo, because the time that it gets to work for them, imagine them having a REIT portfolio or a dividend growth portfolio, or just a growth portfolio when they're born. By the time they turn 18 or 20, they're gonna have different options than a lot of us had at 18 or 20. Let's put it that way. Anything less than 10K seems not to be worth it. All right, so for your situation, Drop 16, that might be true, right? That might be true. But again, it's really about what's going to happen with that dividend. That dividend is going to be used to buy more to grow the portfolio long term. If you're talking about making money to live off of. Another thing, a lot of real estate investors, I see this mistake they make is, and their situation might be different, but they're not investing back into their business. They're looking to get all the money that comes in rent, pay their bills, and then live off of it, instead of investing back into your business to make sure that you have money set aside for replacement of certain items that go, or when you have a vacancy to have actual capital to take care of that vacancy. LaJoy is in the building. Cole is here. What's up, LaJoy? How are you? So Edvar says, I'm not in the space to invest in REITs. I'm looking into ETFs and tech sector to make up time that I wasn't in the market. That may be, listen, that may be the case, right? That may be the case. Michael dropped some fire emojis. Shout out to Michael Manuel. Appreciate the fire emojis. Anyway, with that being said, man, I hope you guys got something from our REIT presentation this morning. I think REITs are a powerful tool, specifically for people that are looking to get into real estate, and for those that have already been in real estate and have had all the different difficulties that come with being in real estate, and maybe looking for something a little bit different. And some people may have heard those stories and they don't want to go through that. Hov did that, so hopefully you want to go through that, right? This is just another option, right? I'm not saying it's the best. I'm not saying that it's better than this or that. I'm saying it's an option. Do I invest in REITs? Yeah, XLRE. I've already told you guys that. But you guys know I'm a Bitcoiner. Most of my stuff is in Bitcoin, but I still have a small portfolio, top T, XLRE, and a couple other things. But it is what it is. So hopefully you guys got some information from that. Now what me and Corey are going to do real fast before we get out of here, we're going to tell you what we're looking at this upcoming week in the market. What are we looking at buying? What are we looking at trading? What are some of the things that we're looking at? Don says, I would also keep in my age. You could retire at 60 and live another 30 years. Age isn't always a reason to change your allocation. That is an excellent point. And it goes to Kamari's point about personal finance being personal, right? some people are 60 and don't even have the ability to retire. Some people at 60 have been retired for 20 years. So you do have to keep in mind a lot of ideas. Great point, Don, and thank you for making it. Hi, Lisa. Lisa's here. Lisa says, good presentation. I definitely will look at REITs. It's a good option. XLR REIT. Yeah. So matter of fact, before I get out of here in terms of the presentation, because I'm going to chop this part for the village, let me share one more thing with you guys. Because I mentioned it a couple of times. So that's when, and again, I'm not telling you to buy anything. I just want to show you guys what it is I'm talking about. So here is XLRE, and here are the holdings of XLRE. So XLRE right now is trading at 41.55 per share. And if you look at the top 10 holdings of XLRE, those top 10 holdings make up close to 60% of all the assets in XLRE. And if you look at the sector weighting, XLRE is 100% in real estate. But the top one is Prologis, right? We also have American Tower, we mentioned, Well Tower, Digital Realty Trust, Simon Property Group, Public Storage, Realty Income Corp, CBRE, Crown Castle. So all of these companies are in XLRE, with Prologis having 9.31% of the overall portfolio. A lot of strong real estate companies. These are some of the strongest. These are probably, considered in the public sector, the top 10 holdings, top 10 ETFs. But you get all of these just by buying XLRE. So that's why I personally do XLRE. This is a personal preference. I'm going to put that out there. Shout out to Nicole. She says she's just joining, but will rewatch. Hey, Nicole, thank you for pulling up and thank you for your support. As always, Nicole is a member of our village, and that is appreciated. But that is our presentation on REITs. Now, we are going to get into what we're looking at this week, and hopefully you guys got something from that presentation. So, Core, do you want to start up and show us what you're looking at this week?
All right, hold up. I got to share it. Share my share.
All right. While you do that, let me get to this comment from Jarrell. That drip effect is one reason I mess with dividends. Side note, y'all talk about land in the village as well. Nonetheless, thank you for the info. Mad grateful. Yes, we talk about why land will always have value, in the idea of land, right? So there's so many thoughts and feelings I have about land. Man, I don't even want to start with that, but yes, we can talk about that. Let's talk about it. So, right. Core, floor is yours, beloved.
So every week I'll start you off here. This is what I always look at before I get started into looking at any other companies or sectors. I look at what the U.S. dollar was doing. Last week I told you the U.S. dollar was topping out and that the U.S. dollar would begin to fall. And so that's what it's begun to do. Now, if you look at what the U.S. dollar is doing versus ES1, that's the futures, that's the Euro futures. You see that gold is shooting straight up in the air. You see the Euro is going straight up. So that it has an opposite effect on those. You see QQQ begin to go and SPY begin to run. And the semiconductor sector. So what I want you to do is to always look at what the U.S. dollar is doing. You have to know what the U.S. dollar is doing is because the U.S. dollar is controlling the market because of the debt. And I will continue to talk about this every time. The U.S. market, like we were just talking about the debt of these companies and the debt service of these companies. And so if the debt service in these companies is terrible, then when the U.S. dollar starts to fall off, they'll fall off even harder. I don't know what happened with Apple, because Apple actually has great books, but you see all of the rest of the tech sector just ran off. When the dollar got cheaper, they just ran off. All right. All of these companies, for the most part, when the dollar starts to decline in value, in price, then they'll start to go up. These companies and its earnings season, as you can see, if you look on my chart, this E right here stands for earnings. So they have earnings on Thursday. So a lot of these, this is what's called earnings seasons, where a lot of the big companies are having earnings. Visa is running into earnings. Bank of America right there. This is Wells Fargo. They just had earnings and they're going crazy. COF which is Capital One, PNC, Wally's World going into earnings, Target. I would actually get back into Target. Looking at this chart, Target looks to be reconsolidating for another run upward. So Target is something that I would look at. Home Depot, Target, McDonald's seems to be making the turn back upward. Simon Property Group, which is one of the big companies that Jim was talking about, going into earnings. I would be careful, but after earnings, I would look to get into Simon Property Group, especially if it falls. If they fall on earnings, they'll be right back like they never left. It's one of those real estate investment trusts that they own a lot of malls and stuff like that, and a lot of space where people like to shop and all of that kind of stuff. So they'll be back like they never left. So yeah, just looking at my chart, going off the dollar. If the dollar continues to decline, then a lot of these companies will run. And so when I see that, I just go either QQQ or SPY.
Okay.
Because if a lot of companies run, those will run. And that's what happened. Like you chose Meta last week, right? And Meta went crazy because
listen, man, I put food out there for folks, man,
So on the earnings, they're running into earnings, number one, and number two, you see every day that the DXY declined, they went absolutely nuts. And so when you look at that, right, and then I'm gonna go to QQQ. I just chose QQQ because it's, for me, a safer option.
Got you.
Right? And QQQ did the exact same thing. It didn't get as much movement, but when we were doing our QQQ play last week, it was what's this, 513, and it topped out at 530. So you could have made, and you were talking about the Facebook investment that you were doing was like $6,000, and the one we were talking about doing last week for QQQ was $600. You probably would have made 30 or 40% on your $600, which is a couple $100 on your $600, and then you would have been sitting cool.
Listen, that Facebook play, I took the Facebook play last week. I think I made close to $3,000. But listen, you got, and by the way, if you guys can go back and watch it, and if you're in the village, like everything's in the village, right? So you shout to Dina too, because Dina's here. Dina says, I hit target up twice in the last couple of weeks. I'm staying flat until after the FOMC meeting, which is this week, right? Yeah, they're gonna talk about crypto there too. And Dina also says, I appreciate your analysis, Corey. So Dina, listen, Dina is in the village. Me and Dina be in the chat during the day as we, smacking around the markets, getting our reparations. So shout out to Dina, because Dina be trading futures too. You know what I'm saying? I ain't there, but but I like to watch her trade. I like to watch Dina get back. So it is what it is, man. But anyway, with that being said, though, great analysis is always good, brother. You think that there are a lot of things that will possibly run up. That's what you're looking at this week in the market. What am I looking at this week in the market, right? So let me share my screen with this one now. Let me show you what I'm looking at this week. Speaking of earnings coming up, I'm looking at the good people over at Alphabet, GOOG. So they have earnings coming up. What's this? What is the earnings? What is the earnings? Core, the earnings are the 4th of February. They got earnings coming up the 4th of February. So they're kind of like at a high right now. And some people say, well, I generally buy things at the bottom of the Keltner channel, but I'm looking at everything going on with Google. It's like so much bullish momentum. But I'm going to buy some time on this. Now, I was looking at possibly setting up to get some 2027s. Let me see. But I think as a short-term play, I'm going to do something out till March. Let me give you the exact contract that I'm looking at. Google has a lot going on, right? And the funny thing is I use so many Google products, but I've been playing around with Gemini a lot more lately. And I'm like, I'm about to leave Chat GPT alone with Gemini. Google got me, they got me, dog. Listen, between my Gmail, my Google Drive, my Keep, all the different products, I'm like, yo, they're using all this, and they integrated it within Gemini, right? I'm like, that's not the only reason that I'm looking at the investment. Also, I watched Samsung Unpacked last week, and I was laughing at how Gemini is just like, you know how Apple released their phones, right? And they said, we'll get the AI back to you later. Samsung launched theirs with the AI, but basically all they did was piggyback off of Gemini. Like Gemini is built into all their new S25 devices. So I'm looking at what they're doing in that space, in a lot of other spaces. And Google is just a solid company. Their books are solid from a fundamental standpoint. Google is just such a solid company, and the momentum in Google right now in terms of the price action is just going one way. I mean, I know y'all want it to be one way, but it's the other way. So let me look at the contracts real fast.
Look at these. Google and Microsoft are. Google didn't run off yet. Microsoft already went banoodles.
But just looking at like everything, it's just a solid company. So if I want to get a $200 call out to 2027, that's going to be a couple dollars, right? That's going to be about $4,300. So I'm just trying to decide whether I'm going to allocate $4,300 to this trade. You know what I'm saying? But I just feel like Google's going to take off. Google is going to take off. I feel like they are positioned to. But what I'm looking at on the shorter term, right, is probably the March 21st contracts. The March 21st, and I'm going to go all the way to $190 call, which is a 70 delta. So for me, I'm going to buy the 190s all the way out to March 21st of Google. Now, the other reason is, right, because we're at the end of January. So even if earnings come, right, let's say earnings come, and the thing about it is, it's possible you'll have a small drop. I still have another month. And the thing I know about Google is because of how they run their company, they will recover. Like, I'm not even worried about that, which is why, to me, the 2027 play actually might make more sense. But I know that's a lot of money for someone to allocate to an option, in our audience or whatever. But there's different ways you can play it. So either the March 7th, $190 call, or I would go a little bit like right at the money at 200, but do that for January of 2027. So that's kind of how I'm looking at Google, looking at playing Google. Now, another way is Corey's way, right? It's funny because this is very similar to what we talked about last week. And by the way, if you watched last week, both of our plays hit, and it's kind of similar. I'm looking at Google. He's talking about QQQ. That's kind of the same thing too, right? And last week I was talking about Meta, and he said QQQ, which is a cheaper way to play it. So let me look at the QQQ contracts real quick, Corey. If I took that same thing, instead of putting out, because the March Google's, let me get that number again. The 190s is 1745, so about $1,800. So the March Googles will be $1,800. Now I took that same approach and did QQQ. Let's see what that is, because QQQ ain't necessarily it ain't that much cheaper. But let's see. All right, so let me look for the 70 delta here. Actually, it's more expensive now. If I'm looking at a 70 delta, the 70 delta on QQQ is about 505. Wow. Yeah. So actually, it's actually the opposite of what we did last week. So Google is actually a little cheaper. So again, not investment advice, not telling you guys to do anything. We're telling you what we're looking at this week in the market. Something else that I'm looking at too, just to throw out there, what I'm looking at. I think this has been interesting. I've been watching, I had some old contracts that I made some money on, and I was mad because I didn't have more time on them, and I didn't own hard shares. I used to own hard shares of this company. I sold the hard shares and bought some contracts, and they cashed out, but, they were coming close to an end, so I had to, I took my chicken. But now I'm looking at them like, man, and I talked about this on a live probably like a year or two ago when SoFi was like $6-7. SoFi right now, dog, is like $17. They've been going crazy. Why am I looking at SoFi? I was looking at a lot of the bank stocks lately. Now, SoFi is, is considered fintech, depending upon who you ask, fintech or banking sector. But the banks have been going crazy. But SoFi is more fintech. But look at where their price point went, Core. Recently, I've been watching it because I had to cash out. And I'm like, damn, I can't. It's not going to print no more for me. So should I reposition? it's difficult for me to want to reposition at $17, right? When I had $10 call options that I bought when it was $6-7. So it's hard for me to like reposition, but I'm watching SoFi and watching it, and they have earnings coming up as well. And I'm dying to see how.
I ain't gonna lie. If they catch any kind of dip, I'm running. I'm getting in. I hope they have a bad quarter because they are not a bad company.
So you're talking about the 20. Actually, it's tomorrow morning. Their earnings are tomorrow morning.
Yeah, let's hope they
early in the AM. So we'll know early in the AM, right? So obviously you wouldn't want to get in the contract when they report early in the morning, unless you want to do a straight lotto. if you want to do a straight lotto play, right? A straight lotto play will help. So, all right, QQQ isn't the play as it pertains to Google. So Lisa asked, what's a good ETF that has Google, right? So how I would do this, and let's go look at it. Let's see what this contract would cost. Another way to play that would be this. Would be XLK.
Yep.
And let's look at XLK right now. A gap on the daily, but this is XLK. Now let me look at the XLK contracts that will contain that and see what they cost if I took the same approach. XLK. All right, options. I'm going on options chain in go to March 21st again. Looking for a 70 delta. I mean, XLK is a little expensive too, right? As in comparison. So XLK is a way to put it. Oh, but you can get a 70 delta a little bit cheaper. It'll save you a couple $100. XLK will be the play. You can save you a couple $100. A 230 XLK, which is about a 68 delta, is like 15. So there you go. So XLK will be the way to do it. So Dina says, I'm up 164% in my SoFi shares. SoFi is a good company. Dina, so we did a live like a year or two ago, right? And I was talking about SoFi, and I had hard shares, and I had a bunch of hard shares, and I sold the hard shares to reposition into kind of like a LEAP contract 2 years out. And like I said, the LEAP contract has been printing money for me, just printing and printing. But it was coming towards its close. I think it ends in like March or something. So I sold out just to, capture my profits. But now I'm sitting down looking like I don't have SoFi to print no more. So the question is, do I buy another one? But I can't. It's just difficult for me to buy a LEAP now at 17, like it's trading above $17, unless I think it's going to go, $30. But I don't know. I want to see how. To Corey's point, some people may say that the move is already priced in even if they have a good earnings, and if that's the case, it'll drop even on the good earnings. And if they do drop, maybe I'll look at repositioning then. Lisa Marie says, "Thank you." Well, thank you for for tuning in. Thank you for the question. All right, listen. So, what we're looking at, Google, QQQ, we're looking at them in terms of being in the trade market. Every day I'm looking at SPY. For those that are in the village, you can see when I do trade SPY. I don't trade it every day because I like to watch the market, see what's going on. But days I do trade it, I share my actual trades with you guys when I'm getting in. Again, not investment advice, but I'm telling you guys, this is the play I'm making. This is the contract I'm buying. And then I show you when I get out too. So that's all in the village. You go to blackwealthrebels.com and sign up for our village. We do have free tiers. And I share my SPY trades in the free tier, by the way. Now, the paid tiers get access to extra coursework. So there's a couple classes that dropped this week that are only for the paid members. So shout out to y'all as well. And we got a bunch of stuff coming for all tiers as well as paid members. So with that being said, though, long-term, is there anything you're looking at purchasing long-term this week, Core?
Man, I buy the same things every week. I buy INVH, I buy SPY, and I buy and I buy Bitcoin. That's it.
So
I got three things in my portfolio. And the Bitcoin I have a daily buy and a weekly buy. I don't have a monthly buy like you do. So I have a daily and a weekly buy.
Yeah, so I use so everybody knows I buy Bitcoin literally every day.
And my daily buy is only $2 a day. My daily buy is only $2 a day.
Ain't nothing wrong with that. All sats matter, right? All sats matter.
And then my weekly buy is $50 a week.
I want to show y'all something real fast, right? So outside of my purchases, I run a bunch of these right here. You see this right here? This is the actual miner. You can see it.
Yep.
Right. So I'm running a miner. You can hear the wind blowing. It's actually printing Bitcoin for me right now. So I buy Bitcoin daily. I mine Bitcoin. I run a node, and everyone knows that, right? But you also know, which I shared in the village, TOPT. I'm always looking at purchasing that with my daily SPY. But keep it in the theme with today's episode. I'm showing you guys this right here, XLRE, right? So here's XLRE. Also looking to see what's going on with that. Maybe purchasing some more REITs since we're talking about REITs today. Share a little bit more information about that. So if you look at where we are, look at the sector over the years, right?
Absolutely nuts.
It's crazy, right? So anyway, that's one thing to look at. Boom. So assets under management, 7.12 billion. That's what it'd be, right? The dividend yield is 3.36%, right? It's a State Street fund as well, but this is what I was talking about earlier with the dividend, 3.36%. So some people will say, well, I can get a higher dividend over here. Yeah, but if you're looking at a different REIT with a higher dividend, also look at the books of that. Now, the books of these companies that sit in XLRE, I already know what they are, right? Which is where it may be a little bit more conservative in terms of the dividend, but in terms of protecting your capital, it'll probably give you a better way to protect your capital. So XLRE is always a long-term play for me, TOPT in Bitcoin, right? That's what it is. And from the long-term standpoint. Short-term, I'm looking at positioning myself in the Google trade in SoFi. I got my eye on SoFi. So matter of fact, I might watch the SoFi earnings come in tomorrow morning and talk about that in the village, man, because I'm interested to see what's going on with SoFi. So that's what I'm looking at. SoFi, QQQ, and Google. Anyway, man, this has been another excellent class this morning. Shout out to everybody that was here for the REIT presentation. If you're in the village, you'll get full access to that REIT presentation by itself outside of us pontificating about what we're looking at in the market. If you want to join the village and if not a member of the village, go to blackwealthrebels.com and join the village. We have free tiers, paid tiers. Each tier gets something different. You can read about the tiers before you sign up. But I would say at least get into the free tiers because in the free tiers, we talk every day and we got our book club coming up. So we got a lot going on within the Black Wealth Rebels. Also, I want to mention this before I get out of here. Last thing I want to mention, for those that are in the local market or looking to come to Philadelphia, we have a Black Wealth Rebels event that's been scheduled. It's scheduled for March 8th, 2025. So we have about a month away. We are doing a cash mob, right? And for those who don't know what a cash mob is we find a Black-owned business. We pull up on the business and we actually support that business. And we do a live class and podcast at that business. But it's a way for us to use our platform and our connections to bring people to support Black-owned businesses to generate money for that business. And we are doing it at the Breakfast Boutique, which is a Black-owned restaurant in Philadelphia. It is right off of Kelly Drive. So make sure on March 8th, we're going to put out a flyer of things for the event. But if you want to come into Philly, or if you're already in the area, pull up, chop it up with us live. You know what I'm saying? Let's get some pics. Let's talk. Let's have some fun. And we're going to do a live class there. In our class, we're going to talk about, it's going to be more of a mental thing. We're going to talk about financial trauma as it pertains to dealing with losing loved ones and inheritance, how you deal with inheritance. We're going to talk about trust and we're going to talk about wills, but it'll be very informative. We have our sister, Courtney Richardson, Desired Legacy. You know what I'm saying? We have Courtney coming through, who is an attorney, who's going to be speaking there as well. Myself, Corey, Kamari, so everybody that's in our circle within the finance space will be pulling up. So that will be at the Breakfast Boutique. That is on March 8th, which is a Saturday. So please come out, support that business. And by the way, the food there is fire anyway. So you know what I'm saying? Fire! Yo, I ain't gonna lie to you, dog. They got the best home fries in the city, dog. The home fries with the green peppers, onions, and all right. I'm going full fat boy status right now, but they got the best home fries in the city of Philadelphia. You know what I'm saying? Anyway, March 8th, 2025. Don, if you're in the city, Don, I know Don be all over the place, man. Pull up, man. March 8th, 2025. We at the Breakfast Boutique. Let's support a Black-owned business. Let's have fun and let's have a conversation about Black wealth. And our conversations aren't about buying the things. We have deeper conversations. Also, last but not least, shout out to everybody who pulled up yesterday. We had a packed room, and the event we had yesterday at Coffee Creams and Dreams, which is another Black-owned business in Philadelphia, 15th and Fairmount. It's a Black-owned coffee shop. For all you folks that want to go to the, SBUX, we support Black-owned coffee shops. Coffee Creams and Dreams. We had an event there yesterday for our investment club, IB Big. Got a chance to speak in the room and drop some wire bars. Check out my timeline. You see me mixing in the wire bars with the real estate, Bitcoin, and Black Wealth Talk. But it was a lot of folks there. We had a good time. So that was amazing. But March 8th is the next event, which will be at the Breakfast Boutique right here in Philadelphia in East Falls. So appreciate you guys. What else? Oh yeah, Stack to Die Trying. Next episode will be dropping in the next couple of days. Wednesday, we have Wealthy Wednesdays. This Wednesday, we are going to talk about life insurance, right? And then Friday is our Bitcoin giveaway. And Friday is where we talk about anything going on in our life. We discuss Nate every Friday, and and we do our Bitcoin giveaway. So that's what's going on the agenda for the Black Wealth Rebels. Remember, blackwealthrebels.com is the website. Any questions? Anybody that's in the village and has a question, the chat is always open 24/7, 365. We'll get to you as soon as we can. But we love y'all. We appreciate all the support. Remember, Black Queens forever, snow bunnies never. We'll see you guys next week in our Sunday Finance Church. Peace and Black Power. Love y'all.